Hi, this is Lara at Elliott Wave Gold with your weekly video for oil analysis for the trading week ending Friday the 8th of June. Last week I'd expected that a deeper and longer lasting consolidation may have begun. A downward week with a lower low and a lower high fits that expectation. I expect it's going to continue for several more weeks and not end until it totals either about a Fibonacci 13 or maybe 21 weeks. It should remain above 55.24 and the target's about 61.12. I'm expecting we may now have some support about 64.0. I'm looking now for a swing up to resistance, which could be as high as 72.5 to 73.0. Let's look at the Elliott wave count first this week. At the monthly chart level, this wave count has the most support from classic technical analysis. That's why it's the main wave count. I expect that oil has found a low back down here. It's in a new bull market to last probably decades. It should be or may be unfolding as a third wave at supercycle degree, so it must unfold as an impulse if this wave count's correct. And supercycle 3 must move far enough above the end of supercycle 1 to allow room for a subsequent fourth wave to unfold and remain above first wave price territory. Within supercycle wave 3, cycle wave 1 looks like it's incomplete and unfolding as an impulse. We have so far primary 1, 2 and primary 3 incomplete. When primary 3 is done, we'll have primary 4 and then 5 to complete cycle 1, which when it's over should last 1 to several years. Primary 3 may only subdivide as an impulse. So far we have 1, 2, 3. I'm expecting a multi-week consolidation now that I'm labelling intermediate wave 4. And when that's done, we'll be looking out for a very strong upward wave for intermediate 5. Oil, typical of commodities, tends to exhibit very swift, strong fifth waves, and that tendency is especially prevalent within its third wave impulses. So we'll be expecting intermediate wave 5 to end primary 3, could be a very sharp upward move, maybe ending with a blow-off top. If we see a new high by any amount at any time frame above 74.96, we can have full confidence in this wave counter, at least in a bull market for oil, at the monthly chart level. Let's take a look at the weekly chart now, where supercycle 2 low is this point down here. So far we have primary 1, 2 and primary 3 unfolding as an impulse with 1, 2 and 3 complete. Now looking for intermediate wave 4. It may end somewhere within the fourth wave of 1 lesser degree price territory, so somewhere below this high and above this low. If it's time consuming enough, it may find support at the lower edge of this Elliott channel, which is drawn from 1 to 3 with a copy on 2. We'll also expect intermediate wave 4 to exhibit alternation with intermediate 2. Intermediate 2 was deep and it was a double zigzag. So let's expect intermediate 4 is likely to be shallow and most unlikely to be a single or multiple zigzag. That leaves combinations, flats and triangles as possible corrective structures for this fourth wave. So there are still multiple structural options open for intermediate wave 4 at this early stage. It can't move intermediate wave 1 price territory. Intermediate 1 has its price extreme at 55.24. Let's take a look now at how intermediate 4 may be beginning, where the high for intermediate 3 is this point here. So far from this high to this low, we now have what looks like a pretty good zigzag downward. We may have found a low here for the short term and may now be looking for an upward bounce within the consolidation. If this wave count is wrong so far with my labelling within intermediate wave 4, it may be that the degree of labelling could be too high. I may need to move it down 1 degree. We'll see how long this next movement takes. If intermediate 4 is going to be the most likely expected flat combination or triangle, then the first move within it is most likely going to be a 3-wave structure, most likely a zigzag, and so that's why I'm labelling this a complete zigzag down here, because it fits expectations so well. This could be wave A of a flat correction, and then we could see B and C. Wave B of a flat correction must retrace a minimum 90% the length of A at 72.03. Wave B of an expanded flat may move beyond the start of A, so we could see a new high as part of this big consolidation. In classic analysis terms, we could see an overshoot of resistance before the end of an upward swing. If intermediate 4 is a triangle, we could have a zigzag for A, now be looking most likely for a zigzag for B. It has no minimum requirement for a triangle, and as in a running triangle, B can move beyond the start of A. We could see a new high as part of wave B of a triangle. If intermediate 4 is a combination, we could have a zigzag complete for the first structure in a double combination. We'd label it minor wave W. We could be looking at a bounce now for minor wave X to subdivide as a corrective structure. And X waves within combinations have no minimum nor maximum. They can make new price extremes beyond the start of the first structure in the combination. X waves within combinations are usually relatively deep. So there are still multiple structural options open for intermediate 4, and it's absolutely impossible for me at this early stage to tell you which structure is going to unfold. In coming weeks, as the structure continues, I'm going to have to start to use alternate wave counts to look at the various possibilities. Because it's absolutely impossible for me to tell you at this very early stage which structure intermediate wave 4 will be, that means it's impossible for me to tell you exactly how the pathway is going to unfold for each of these subwaves. In classic analysis terms, we're looking at swings from resistance to support and back again within a big consolidation to last several weeks. And those swings within consolidations do not move in straight lines. They are choppy and overlapping. If my labelling here is correct, we're now looking at a B or X wave within a consolidation, and of all of the subwaves, they are the most difficult to analyse because they exhibit the greatest variety in structure and price behaviour. They can be very sharp, swift movements, or they can be very complicated, choppy, overlapping side wave movements. At the monthly chart level, this is the alternate wave count. It does not have support from classic technical analysis, and so I don't want to spend too much time on it. If cycle B is over here rather than here, then cycle C of the zigzag for super cycle 2 may be incomplete, subdividing as an impulse 1, 2, 3, 4, and now 5 needed to the downside. In terms of Elliott wave, this wave count doesn't have as good a probability because there is inadequate alternation. Well, there's no alternation actually between primary waves 2 and 4. There's good proportion, but primary 4 is a zigzag, primary 2 is a zigzag, and within them, the B waves were triangles. There's virtually no alternation there. Alternation is a guideline, not a rule. It's most often seen, but it's just not always seen. But when you have a wave count that exhibits no alternation, you have to judge it to have a lower probability. Elliott wave analysis, like all classic technical analysis, is an exercise in probability, not certainty. Let's take a look at primary 4, where primary 3 ended here. A, B, C, the zigzag could be over, but we need a new low now below 55.24 to invalidate the main wave count before we can have reasonable confidence in this alternate. And that would also come with a substantial breach of the lower edge of this Elliott channel. If that happens, then we can take this seriously, but it doesn't have good support from classic analysis. If we've had a big trend change here at primary degree, we should be looking for a 5 down now at the daily chart level. We could have 1, an expanded flat for 2, and then we would expect 3, 4, 5 to complete intermediate wave 1. For this idea, intermediate 2 may end about, minor 2 may end about the 0.618 Fibonacci ratio of minor wave 1, which is about 70.11. It can't move beyond the start of 1 above 72.90. Let's take a look at some classic technical analysis now. At the monthly chart level, the last monthly candlestick was quite bearish, encouraging me to expect that we were looking for a multi-week and possibly even multi-month consolidation. I do expect that oil is still within a bull market, but trends do not move in straight lines. They have consolidations and pullbacks within upward trends along the way, and I expect we're looking for a multi-week consolidation or pullback at this stage. Last month was bearish with a long upper wick and support from volume for downward movement during the month. The balance of volume last month was down, and there was support within that month for that downward movement. That in conjunction with the long upper wick, that's quite bearish, so I expect another 1, 2 or 3 red weekly candlesticks or doji or a mix of them for a consolidation or a pullback. But the reason why I expect oil is still most likely in a bull market is this very strong long-term bullish divergence with price and on-balance volume On balance volume has made new highs above this prior point back here, and yet price has not done so yet. On balance volume should be read as a leading indicator. Where it goes, price may follow, and so I would expect, it's very likely, that price may well follow on through with new highs above this prior high here at least. What about the short-term picture for oil? How's that looking? We've got downward movement with falling volume, and now for the last couple of days, a little bit of upward movement. Also, volume continues to fall. Reading the last two daily candlesticks, Friday's session has a long lower wick that's a bit bullish. The balance of volume for Friday was down and the candlestick closed red. During Friday's session, there was not support for volume during that session. There was more support for upward movement within Thursday's session. And so these two candlesticks together have a slightly bullish volume profile. I'd be expecting green daily candlesticks for Monday and Tuesday, as quite likely after that. ADX reached extreme for the prior upward trend. It's now declining, telling us that this extreme upward trend looks likely to have ended, and we are now possibly in a consolidation. ATR now expanded as price fell and now is starting to contract as price rises. So there was some support for increasing ATR during this falling piece of movement here, and now at the early stage of a possible bounce, it's quite normal for ATR to continue to decline. ATR declined at the end of this fall and is still declining as the bounce may be beginning. Price reached support and stochastics reached oversold, so we could expect an end to this downward swing here. There's good support about 64.0 to 64.5, but while stochastics was oversold, it has not exhibited good bullish divergence with price. And so that's why I say we might have a low, we might have support here for our consolidation, but because there's no good bullish divergence, it's also possible that we could see more downward movement to the next support zone, about 62.0, before price has found its area of support for the bigger consolidation. Because when stochastics is oversold and then exhibits some clear divergence with price, that's when we can expect that one swing is over and look for the next swing to begin. So this is a basic idea of how to analyse, and also useful for trading, how to analyse consolidations. We find the resistance zone, we find the support zone, we expect swings from one to the other, and we use stochastics in conjunction with resistance and support to tell us when one swing has ended and the next has begun. But this is one reason why trying to trade big consolidations is so very difficult, and why I would advise it only for most experienced members. Price can overshoot resistance and support. It can spend quite a lot of time around there consolidating before one swing ends and the next begins. We're very early in the consolidation at this stage, and so we do not have confidence at where resistance and support for it is going to be. We may have resistance here, but it certainly could move a bit lower to find support here. Price certainly could move lower and find its ultimate support for the consolidation below. Let's look at this early next week. This is probably going to help to tell us if we found the support area, at least initially, within the consolidation. Neither of these lines have good technical significance, but for the very short term, we may get a signal. If we get a break above this little resistance line, then have a little bit more confidence. Price may have found its area of support for now, and we may be looking at an upward swing. But if we get a break below support, then look out. Price may not have found its support area for this downward swing. It may move lower to about 62.0. So draw these two lines on balance volume and watch them each day next week and look for a small short-term signal. RSI is neutral. There is room for price to rise or fall. We've gone over stochastics, and Bollinger Bands expanding as price moves lower is bearish, because overall Bollinger Bands tend to expand when price is trending, and they tend to contract when price is consolidating. Now, I'm talking about the daily chart level. So within this large consolidation at the weekly chart level, there will be short-term trends as price swings from resistance to support and back again. That's all for me with your oil analysis this week, and I hope all our members are having an absolutely fabulous weekend.